Today, soybeans jumped up in hopes that the trade deal is near. They keep talking about the U.S.-China trade deal is going to happen on Saturday, and with no other news out, I think it's starting to take hold of the market a little bit, and we've had this wild volatility. So today it was up almost 17 cents at one point. It's backed off just a little bit, but there's really a possibility that we're finally going to have some movement to this resolution. One thing also to look for is that Brazil and Argentina are full steam ahead with their planting, so that normally would really put some pressure on the market. And it seems that when that information comes out, it really pushes the market down, as we can see that there's been some big 10 and 20 cent moves in the soybeans. So I expect that there's going to be a lot more volatility ahead. Corn finally has recovered after about 7 weeks of just kind of sinking down every day for maybe 10 or 12 cents since its high, but it's starting to show a little bit of sign of seasonal strength, because normally at this time we get a little bit of an uptick, but all the other indicators are still on the bearish side, especially like the technical numbers. But maybe a bounce, if we get the talks to move going forward, will be in the cards and really push this market up a little bit. Now, there has been some ethanol numbers that are coming up that there's a little bit of uncertainty on whether those are actually solid numbers and that they're going to even tap into any of the corn supplies that we have. That's also underpinning the market just a little bit. So we're going to watch that closely. We really don't have an understanding on where those numbers are going to support here. And as the harvest comes in and the yield numbers really get here, we're going to see just what our carryout is going to be. So still a lot of bearish news normally, and that's kind of how it goes here at this harvest time. Now, wheat was higher today, so wheat is another one that's just been up and down and been volatile over the past number of weeks. The variable storage rates dropped 3 cents from 11 cents to 8, so they've dropped now to a little bit more of a competitive level, which means that we've been able to start to get a little bit of an uptick in our exports and start to move some of our product out. The DEES contract itself rallied back to that benchmark of that $5 mark, and so the market's been up and it rallied and kind of spiked up right before the close and brought in a little bit of selling coming in, but we're right here at the benchmark on the DEES contract. Of course, the deferred months are a little bit higher right now. I think the March contract is up and got up almost to 514. I think we're at about 511 right now before the close here. So we're going to watch that. Still looking pretty strong, but that can turn on a dime. So we're going to watch that closely. 2 more days left before the talk. So we're going to see how that works out.